Hi, everybody. Welcome to the Insurance Journal's Academy of Insurance's weekly webinar after show. I'm your host, George, and joining me for the after show today is the director of the Academy of Insurance, Mr. Patrick Rate, and today's instructor. Today's class was the E&O of E&S, Avoiding the Pitfalls of the Surplus Market. Our instructor is Mr. Chris Burand. Chris, welcome to the after show. It's great to have you here. I don't know how many after shows this is. It's over 5. I don't know, something like that. I think if this is Saturday Night Live, you get a special award, but it's
All
the
right.
Academy, so we're just super happy to have you here. Thank you so much for being here today, and welcome to the after show.
Thank you. Appreciate it.
Fantastic. So the class was the E&O of E&S, Avoiding the Pitfalls of the Surplus Market. It doesn't sound like there's a way to avoid the pitfalls of the surplus market. It sounds like an insurance version of an Indiana Jones movie. When you said you were making the distinction between like unlicensed and licensed or admitted, I was looking at the New Hampshire state insurance site, and I was looking for, can you get a surplus lines license? There's property and casualty, there's life, there's health. How do you get into the surplus lines market in general? Not the market per se, but how do you become a surplus lines agent? It doesn't seem like there's a linear way to do it. Maybe you hear about the coverage. I mean, is there a way to get involved? Like, well, I've got a kind of market that you can, come to my house at 1 a.m. and meet some guys, and we'll show you how to, is that kind of how it is, or?
There might be some of that. It's kind of funny. I'm reading a book from 1973 on insurance fraud. And it's funny how many of those conversations actually occurred to create fictitious markets back then, just about like you just described. They actually were fairly well centered around Fort Lauderdale, Florida at the time. And they'd have many conventions, it seems like, if you read between the lines of the book. It's really a fascinating book. They probably go to the Caymans now, but no disparagement to the Caymans, but seems familiar. So I think if you take the basic factors to minimize your exposure of education and procedure, the extra risk isn't all that great, but you've got to do the hard work. Otherwise, it is significant. Getting into the surplus lines world is, man, there are so many different angles to it today. It is not, there's that old television commercial about Oldsmobile, brand not even made anymore. This is not your father's Oldsmobile. Well, this is not your father's surplus lines market. It used to be kind of one-dimensional. So if you want to get into surplus lines in a DUA capacity, well, you better be able to find the right reinsurer, the right market. You probably need to find somebody that is already in that space that will kind of, in a roundabout way, sponsor you to get into it in whatever angle, field, niche you want to do. If you want to do a general surplus lines, MGA type of thing, then you're going to have to go get your licenses. You're going to have to go get your markets. And in both cases, you're also going to have to find your own IT system. And the IT systems are specific to which kind of market you want to go into. So there's just a lot to know, and a lot of very specifics as to how to do it. It's just going to vary dramatically on which part of the market you want to go into.
In hard markets, when it's tougher to get policies written, is that when surplus lines becomes more, I don't know, available, but maybe it's a policy or a market that people seek out more. And how does surplus lines in that case, how do they advertise? How does the surplus lines, when it's kind of.
Yeah, in this marketplace today, I'm not sure they have to advertise. Everybody's seeking them out.
Okay.
They probably have more phone calls than they can handle in a large degree. But they do a lot of advertising, and they show up at a lot of trade shows and things like that as well, just like a regular insurance company typically does. But right now, I'm sure they're over capacity in fielding calls. The market is so ridiculously hard.
Mm-hmm.
And agents are so desperate and insureds are so desperate that, and the only market available in so many different ways is surplus lines.
Got it. Patrick, when you wrote for your MGA, was it easier to deal with admitted lines, or did you get the odd surplus line? You know, or what is your feeling about the topic in general in today's class in particular?
Well, I appreciate a robust surplus lines market as as somebody who's had a kind of a different insurance career. In my first MGA where I worked, we worked on admitted paper for 95% of the risks that we wrote. There were a few items that we could write that we would instead of submitting to our primary carrier, we would send it over to their surplus lines carrier that they had control over, and we would work with them. And that was how we got risks that were not otherwise eligible in many ways. But here in Florida, one of the things that I have thought about and talked about a lot over the years is why are we not embracing the surplus lines market, especially in the personal lines space, where over the last 10 years, the largest insurance company, by and large, over many years, has been the state insurer of last resort. Why would we promote that instead of some strong surplus lines contenders who could write at least as good coverage as anybody else, and in Florida do it at a price that would be reasonable for many insureds? In fact, several years ago, there was a system that was created that all the agents in the state would get access to, that would a clearinghouse system that would be a multi-quote kind of system. You submit a risk and you get quotes from several insurers, including the insurer of last resort. And that was shut off. The surplus lines community did not have access to that. There's legislation this year to open that kind of space up to surplus lines companies, just because the market is getting to where it's not a luxury, it's a requirement now.
I'd like to emphasize that the surplus lines market needs to be robust. It does the industry a massive favor the more robust it is. And with, one of the problems that you have in Florida and around the country on property right now is that the TIVs are ridiculous.
Yep.
But a lot of that TIV exposure comes about because it's a mandated admitted market. Surplus lines can address the TIVs probably with more surgical expertise. And from that perspective, it becomes a great solution. I really don't have any concerns about it as long as the agents do their due diligence on the marketplace. And I think it would behoove the regulators to embrace within the right parameters an increase in the robustness of their encouragement of surplus lines.
Yeah, absolutely. I think that they have the flexibility to charge what may be appropriate. It may seem high to people, but it may be right for the risk. I've seen in a few places where as you look at obtaining a surplus lines license for an agent, sometimes that can be fairly difficult. Back in my MGA days, we had some difficulty getting somebody who could pass the surplus lines exam here for Florida. It can be complicated, and I think that's a good thing, because if you've got to know what you're doing, you've got to know what you're dealing with, you've got to be able to talk to underwriters who are more savvy than the computer said yes or no. Or the underwriting box is yes or no. They're willing to talk to you about a risk, and they are willing to put in exclusions or change terms in ways that allow them to write the risk profitably. But then again, like you say, we've got to do our due diligence and make sure that we understand what policy we're getting when we do that.
Yeah, you do. And again, like I said in the presentation, there's an education aspect to this. Wholesale surplus lines is not for the amateur agent.
Yep.
That's where amateur agents go to get killed. So, you have to know what you're doing in this space, and to pretend otherwise is ridiculous. So, but if you know what you're doing, you can really run roughshod over some of your competitors. It's pretty cool. I'm all for it. Just be educated, know what you're doing.
Yep.
Chris, you mentioned something interesting towards the end of the presentation. That's don't fall for charismatic agents.
Yeah.
Would the secret be to have an unassuming, soft-spoken agent? Is that how you'd be successful in surplus lines, to get into the, when you say charismatic agents, I mean, should they be charismatic in order to, here, do this policy, or what's the, if you could expand on that a little bit?
So the catch is that a very large proportion of the fraud that occurs in historically, going back to even reading this book from 1973 in the insurance space, is really originates with extremely charismatic people. Very, very charismatic people. And it's so easy to fall for someone that has that charisma and just immediately trust them. That's the currency of charisma. And the not so good people, sometimes that's the currency they spend. And we don't have any room for that in our industry. Especially in surplus lines, it's very dangerous to do business with markets that are not licensed correctly, or they don't actually have any money, or the policies are just flat out entirely fake. Everybody could go and read what's been in the Insurance Journal, what's been in Forbes over the last 24 months, and just see some really, really good examples of serious fraud in our industry. And as far as I know, it's all in the non-admitted, non-traditional space. So that's where I was getting with that point. Is
got it.
Just charisma is great if you're ethical, but don't just trust that every charismatic person's ethical.
Gotcha.
Yeah, because they can build trust in ways that allows you to be had and be tricked and be fooled, and that's what creates the ripe opportunity for the fraud.
It really does.
Chris, I have one last question for you. So on Thursday, you're back with us again with your next class, Emerging E&O Risks for Agencies. Can you give us a little sneak preview? I guess a peek and a preview would be a preek into where we might expect on Thursday.
Yeah, for sure. So I'm going to be talking about the two aspects of it. One aspect is how the world has changed, creating exposures that come out of the fact that the industry is not keeping up with how the economy has changed. So insurers just have more exposure, and in many ways, there's inadequate solutions. And then I'm also going to talk about how the litigation environment has changed from a number of different angles, probably in the last 5 years more than any other time.
Okay.
Yep.
All right, Chris. Well, thanks. Thanks for your help today. Thanks for a great class. Patrick, thanks for coming to the after show. Always great to see
highlights.
you. And you're dressed very sartorially splendorous today. I got the memo.
Looking good.
As do you. Well, hey, gentlemen, thank you so much for everything. And take care of yourselves, everyone. We'll see you at the next class, the next after show. And have a great day, everybody. Take care.